Alright guys, just crawled out from my bunker to give you an update on day 3 of this trade war, and things have just gotten from bad to worse. And as we said before, the world will retaliate against Trump's tariffs, and we just had China hit back on US exports in a really big way. Now Trump has pulled the trigger, and it's time for the US economy and the American people to deal with the consequences. And here's the story Trump is trying to sell. It's a really Pollyanna tale where he gets everything he wants. Global manufacturing is going to come back, and the world will not retaliate, and US goods will get cheaper. But here are the facts. The US economy is on the brink of a horrible recession. The tariffs on Canada and Mexico are already forcing US auto plants to fire American workers. Nearly 1,000 US workers selling powertrains will be laid off. Stellantis has paused production at their Canadian and Mexican plants, so there's no need to buy US products anymore. Businesses are making decisions based on the hard realities on the ground. US companies see that US exports are going to fail, they're going to fall, and it's time to fire workers now before things get really nasty. Now, we can point to the recent labor numbers and say that Trump is doing a good job, that the tariffs have zero effect on the US economy. But realize this is just the calm before the storm. US payrolls have risen by nearly 230,000 last month, but unemployment has risen to 4.2%. The tariffs have not worked its way into the greater economy just yet. Don't forget about this. And once it does, we will see the recession hit the US economy like never before. And just yesterday, we had a serious warning from JP Morgan telling us there will be blood. The bank has upgraded their recession risk to 60%, and they gave three big reasons here: retaliation, a slide in US business sentiment, and supply chain disruption. In other words, countries are going to crush US company earnings by raising their own trade barriers. US businesses will not hire people or expand operations. Trump's tariffs will also raise prices and cause consumption to crash. That's coming. But let's talk about the here and now. The effects of the tariff war on the US dollar and the markets are going to put the nail on the recession coffin. And even Besant has confirmed that a collapse is most probably coming.
You look back in 1998, you look back in '07, right before it looked great, everything collapsed. So, I mean, it looked great right before everything collapsed. So we have taken us off that trajectory, and we are putting ourselves back onto a sound trajectory.
Well, things look great when Trump entered office, and now everything is collapsing. But US consumers will be facing a double whammy. While Trump prefers a weaker dollar to boost US exports, there's a problem with this. The plants aren't being built yet. All those pledges of investments, they're still pipe dreams. Nothing has manifested yet. And the dollar falling comes at a horrible time when the US still imports a lot of stuff from the world. The dollar has wiped out its post-election rally. It's one continuous drop, with the final collapse coming after Trump announced the tariffs. This is one big disaster because it throws the entire assumption of the dollar as a safe haven asset into the bin. Even though Treasury yields are dropping thanks to people buying bonds, the overall demand for dollars is still falling. This is horrible for US consumers. Their cost of living is going to rise even further at a time when tariff inflation is about to inflict greater pain. Now, we are seeing is a rejection of dollars by global investors. They are buying other currencies because US growth prospects are just downright horrible. Especially after China retaliated against the US, we can forget about the US economy growing this year. And as such, the demand for dollars is going to come down. The reciprocal tariffs were a mistake. No one really expected how it would be calculated. Trump actually targeted the surplus a country has when trading with the United States. The equation is just crazy. China, for example, has a surplus of nearly $300 billion. That's 68% of total Chinese exports of $438 billion. And you divide that by 2, you get that ridiculous reciprocal tariff rate of 34%. This is a big problem when the markets were thinking Trump would simply raise tariffs on Pacific products. That's why we have this big sell-off across all US assets. The reciprocal tariffs are just too high. It would only invite retaliation plus destroy the consumption power of Americans. But it would also hurt the dollar's reserve status as well. And it's important we understand why this is a really big threat. The US buys over $600 billion worth of stuff from Europe, and for China, it's around $438 billion, Japan $150 billion, and $136 billion for Vietnam. The US pays its bills in dollars, of course, and pushes out the reserve currency to the world. And now that Trump has decided to tariff everyone, suddenly US imports will start to collapse. Either consumers stop buying foreign goods or they shop local, and either way, this flow of dollars starts to slow down. And with fewer currency units out there, the dollar will gradually lose more of their reserve status. This is horrible because with fewer dollars around during a trade war, there will be less recycling of money into US assets. Why do you think US stocks were exceptional for the last 2 decades? That's because US consumers were running a huge trade deficit, flooding the entire world with a lot of dollars. But now this is going to slow down dramatically. And if US consumers are stuck buying more domestic goods that are priced higher, profits will drop. People's standard of living will also fall. And normally, the stock market doesn't really equate to the real economy. But the US is a really special and bizarre case. US retirement savings are getting torched because a ton of it is tied up in the stock market. A big portion of 401k assets, over 70%, are invested in stocks, and a big portion of that exposure is linked to the S&P 500. Well, we are witnessing one of the biggest market bloodbaths in modern US history. A lot of people are losing their savings. The bigger the downturn gets, the worse it's going to be. And you know things are really bad when they are getting the media to downplay the collapse.
And he's delivering. And you know what? I don't really care about my 401k today. You know what? Not that I can afford it, not that it isn't important, not that I'm not at a point in my life when I should be worried about my 401k, because I am. But this is what I believe. I believe in this man. And I believe that what we're seeing now with his bringing in $1 trillion in business and manufacturing and companies moving back to the United States.
Now, this thinking is screwed up both on a micro and macro level. People losing wealth cannot be ignored. And when we zoom out, if people feel poorer, they're not going to consume, they're simply not going to spend. And this will deepen the recession and just make it last even longer. It's a deadly feedback loop where the longer this lasts, the worse it will be for company earnings. And when earnings drop, prices also fall. You rinse and repeat, it could trigger a big capitulation event where things just fall off a cliff. And this is how financialized the entire US economy is. US equities have been overpriced for a very long time here. It's around 23 price to earnings ratio today, but during the recession, the PE could drop down to 15. And that happened back in 2020 and it crashed all the way down to 10 back in the '08 housing collapse. We might be on the brink of such a disaster if Trump's trade war gets out of hand. We are witnessing a big repricing of US stocks. All the multiples, they're getting adjusted down because investors, they realize the truth. Corporate profits are taking the elevator down. Trump has pushed American equities off a cliff. And here's the problem. Will the Fed step in and save the markets? Will rate cuts be enough? Or will the US government start QE and flood the system with cash? This is the big dilemma because if they don't, people's retirement savings will collapse and turn this recession into full-blown depression. However, if they do, it will hurt the dollar. But let's circle back to the tariffs for a bit to really understand the impact on the economy. Now, when Trump imposed his tariffs, there are three parties involved: the exporter, the consumer, and the importer. And one of these three people will eat the most of the tariffs. And if it's the importer or the US consumer, the economy takes a real hit. And now we have a clear answer. It will be US companies themselves that absorb those tariffs. Stellantis joins Ford to offer discounts to their customers to counter the trade war. The promotional discounts will start this Friday and run during April. Customers will be offered the same pricing normally reserved for employees, so they will get to pay a lower price. US auto companies are desperate. You don't give such incentives if your consumer is strong. You do it because people have no money left to buy. The US consumer is weak, so you have to conjure discounts up to bring in business. The discounts from Stellantis and Ford could put pressure on other automakers to cut prices, squeezing their profit margins. Shoppers can choose between the employee discount price or cash incentives on a price negotiated with the dealer, which means the discounts can get really steep indeed. We are going to see a huge profit squeeze happen throughout corporate America. The consumer simply has no money left to buy, especially when Trump raised tariffs on Chinese goods by 54% in total. That was not a smart move. That's not the art of the deal. Prices of everything from Walmart to Dollar General, they're going to fly up. The pain will be split between US consumers and the retailers themselves. China is not going to play ball. Their exporters will not eat the bulk of the tariffs. Ironically, what Trump is doing will deindustrialize America faster than ever before. Bringing plants back to the US only works if your domestic consumption base is strong. Is there business to be had in the United States going forward? The outlook isn't looking good, especially when automakers are slashing their prices now. Trump is touting that US manufacturing is coming back to the country. Global companies are pledging 1.6 trillion of investments into the United States, and that in turn will create over 420,000 jobs. But those are just pledges. They won't materialize if the US consumer keeps collapsing. Countries hitting back with counter tariffs and foreign boycotts will put a squeeze on US corporate income abroad. In other words, profits could actually come down, which means traditional industries like automakers and steelmakers could see a future of very slim profit margins. The US would still remain a tech and service based economy, despite what Trump is trying to do. Now, this is a list of corporate investments Trump is taking credit for, the majority of which are almost all tech companies. 500 billion from Apple. Project Stargate, which includes money from Oracle and OpenAI, comes in at another $500 billion. Nvidia, 200 billion, TSMC, 100 billion, and $40 billion from Microsoft. And these are the companies confident enough to expand in the US because their profit margins are big enough. Exporting services is way cheaper than trying to put a car on a boat and ship it to Germany. Microsoft gross profit margin is well over 60%, so they can take the tariff hit both domestic and foreign if it happens. But not many heavy industries can do the same. They are running at 20% or even 10% gross margins before taxes. So China imposing a matching 34% tariff will hurt them badly. If the world counter tariffs the US, this would drive costs up and deter investments into key US industries. Well, the thinking the US has is really twisted. They still believe they can drive prices down, bring back jobs, and secure a bright future by destroying global trade.
So we don't want cheap Chinese goods anymore? Consumers are not going to be happy about that.
You know, we have to think about this. The United States, we're not just an economic free trade zone. We have communities and families with children and dreams and aspirations for those children, and we're no longer going to barter their future for cheap goods made in China.
So welcome to the Twilight Zone, guys, and I hope you are strapped up because we are staying in Hotel California for a very long time. Trump might not ban at all. So hang tight and get used to seeing red. US stocks could continue to go down for quite a while longer. But let me know what you think. How far will the crash go? And can the dollar ever recover from the US trade war? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.